All right. Welcome. It's been a while since I've done a video, but today is September 26th, 2024, and thank you guys so much for tuning in. Today's video is going to be over the trade that I took today. I took one trade, and it was counter trend. Yeah, I'll just show you guys through the charts here. All right, so coming into the morning here. Let's take a look at what the charts look like. Okay, so before I even hopped onto the charts here, I noticed, okay, London Asian session and pre-market session looked like we expanded a lot, which we did. And this was already like a telltale sign that, okay, we could either be in consolidation here coming into the New York AM session because we had such a massive move higher during the Asian and London session, or we could have some sort of retracement, or I mean we could just continue higher and just but so like I said, that those scenarios were already playing in my head, and at 9:30 here we began to price lower, and I want to draw y'all's attention to how we closed here on the 4-hour candle. So take a look at how we closed here on this 4-hour candle and 8-hour candle. 4-hour candle, bearish. 8-hour candle, bearish. So what do I mean by that is based on the 8-hour and 4-hour candle, how we closed there, it suggested the idea, okay, well, we could attack this 4-hour low right here. 4-hour swing low. And this 4-hour low is in fact also in alignment with the 8-hour low. So we also created this 8-hour fair value gap, and there's a popular ICT trader in the names of Justin Marlin. He really makes this clear for me. He stated there are 4 reasons why prices move: generate liquidity, take liquidity, rebalance fair value gaps, and rebalance to discount and premium. Well, the idea that I had here was, okay, prices is probably going to rebalance this 4-hour fair value gap, and the way we closed here on the 8-hour, we were probably going to rebalance into the 8-hour time frame as well, or the 8-hour fair value gap. So I had, like I said, those were kind of already going into my head here, like, okay, we could have some sort of retracement based on how we close here on the 4-hour and 8-hour. So I waited and I wanted to see if we could get some sort of entry pattern, and I noted out this here. Pay attention to how we have this dealing range. So there's the very first swing low here, or significant swing low on the hourly chart, is this hourly candle at 1 p.m. September 25th, 2024. And take that low and bring it to the swing high at 9 a.m. September 26th. That creates a dealing range. And like I said, why do prices move? We move to rebalance inefficiencies. So we are moving lower to rebalance a 8-hour and 4-hour fair value gap. Why is there another reason why we should be continuing lower here? To attack discount of the dealing range. So if I were to short here, right, even though we are in bullish conditions, I have to understand that, okay, if I'm going to short, I can't target previous day low. There's no reason here. There's not enough structure in price that suggests the idea that we will attack previous day low. But there's enough structure in price that suggests that we could rebalance this 8-hour fair value gap and 4-hour fair value gap. So like I said, let's go on to the lower time frames and kind of align the lower time frames with the higher time frame narrative. So like I said, I'm waiting for some sort of entry pattern, and the entry here was actually this. So I noted out, okay, well, we are not getting any any sort of reaction to this 4-hour fair value gap. On the 15-minute time frame, we just closed below the 4-hour fair value gap's consequent encroachment. So seeing how we had this massive move higher here during Asian and London session, I thought during the New York AM session we could have probably have some sort of retracement into the 4-hour fair value gap to continue higher. However, we didn't respect the consequent encroachment or any area above the consequent encroachment, and I'm talking about this area right here. So we didn't respect the upper portions of that 4-hour fair value gap. So if we are in bullish conditions, right, you always want to see prices respect the upper portions of a fair value gap, and in this case we didn't. So like I said, as time went on, we had more structure. So what is the 15-minute and the 30-minute telling me now? Well, the 30-minute and 15-minute are suggesting that we could continue lower to attack the 15-minute low, the 30-minute low, which is in alignment with the 15-minute low. And notice how, look at the way we closed here. We have yet to close or even get close to the take out the discount of this range here. So we still have, in technicality case, we still have room to continue lower. So in the very next 15-minute candle, I'm anticipating some sort of open. We wick into some sort of lower time frame fair value gap to attack the discount of this range. And notice how the power of 3, this 15-minute candle, we can anticipate for that 15-minute candle's low to be taken, right? And it is also in alignment with the discount prices trading back into discount, and possibly even rebalancing this entire 4-hour fair value gap here. So now that I have a there's time frame alignment, I'm understanding higher time frame narrative, which is to rebalance fair value gaps and to rebalance to discount of their dealing range. I would now go onto the lower time frames here to find some sort of entry pattern, whether that be a order block, a breaker pattern, an inversion fair value gap, a regular fair value gap. Whatever your PD array of choices is up to you, but in my case, I prefer using fair value gaps. So 15-minute model in alignment with the 30-minute model, what time frame am I going to go on? The 5-minute, 5-minute to 1-minute time frame. So on the 5-minute time frame, is there a fair value gap that suggests for us to continue lower to attack the 15-minute and 30-minute low? And let me just mark this out for you guys here. 15-minute / 30-minute low. Make this in point. So 15-minute and 30-minute low, keep in mind that is the draw of liquidity. So I'm going to put a little plus sign next to it, indicating that that is the magnet. So we have this small 5-minute fair value gap here, right? Well, if we apply breakaway gap theory here on this very upcoming 5-minute candle, are we anticipating for prices to open, trade all the way up into this 5-minute fair value gap and then continue lower? No. Notice how this 5-minute candle here, this one, at 1025. Notice how that 5-minute candle closed below the 1020 5-minute candle. 1020 5-minute candles low. So we closed below that. That is my interpretation of the breakaway gap. We shouldn't retrace back inside this 5-minute fair value gap if we're bullish, or bearish in this case. We should open up on this very next 5-minute candle, trade up into an even lower time frame fair value gap, and then continue lower. So now that I can scratch off, okay, prices shouldn't trade back inside this 5-minute fair value gap. So I'm going to note this as a 5-minute breakaway gap. And if you have that in mind, where can you place your stop loss? Well, if you're going to enter on, let's say, well, in this trade, I actually took my trade on the 1-minute time frame. So let's say I gave you guys forward. I forgot what the word was, but yeah. So like I said, in this case, because we're treating this as a 5 minute fair value gap, and you don't want to see prices trade back into it, we can use that information and plug in, okay, if prices shouldn't trade back into here, I'm gonna have my stop loss in this price level here. So it's very objective. There's no, the way I trade isn't subjective at all. It's very objective, and objective being concrete. There's no you can't kind of trick yourself or be delusional here. It's very, if this happens, then this should happen. Um, yeah. So on the 3 minute time frame, um, is there a, or sorry, let's go into the 4 minute. On the 4 minute time frame, is there a fair value gap? Well, there's this 4 minute fair value gap. Should prices trade back into it? No. And you guys are probably kind of understanding the gist of it. Look at how we, well, this is actually at 10:30. So this 4 minute fair value gap doesn't even apply because it's a 10:30. 4 minute goes from 10:28 to 10:32, and this kind of skips that interval. So I'm gonna skip this 4 minute, and let's go straight into 3 minute. So 3 minute, we have this 3 minute fair value gap, and you want to ask yourself, why shouldn't we trade back inside this 3 minute fair value gap? Because we closed below this 3 minute low. So the 3 minute candle at 10:24. Notice how we close below its low on the very next 3 minute candle. This, like I said before, this indicates that this should be treated as a breakaway gap. So if we're not going to enter off of the 3 minute, what other time frames could we enter off of? The 2 minute and the 1 minute. 2 minute. Is there a fair value gap that we could trade back into? It's in this exact same area where the 5 minute and 2 minute, or where the 5 minute and the 3 minute is, and we don't want to see prices trade back into it. So on the 1 minute time frame, we created this 1 minute fair value gap, and you guys can't really see it, but look at how we closed above the 10:28 candles low. We had closed above it on the 10:29 candle, 1 minute candle. So this means that we created a 1 minute fair value gap that could be traded back into. So that means if we open up at 10:30, right? And here's another tip. You always want to be selling above an opening price, and you always want to be buying below an opening price. And if prices is fractal, you can apply that way of thinking to almost every single time frame. 5 minute time frame. Well, I don't suggest taking 5 minute models, but yeah, you can take it. You can apply that time frame or that concept to the 15-minute time frame, to the hourly time frame, 30-minute time frame, whatever time frame that you're comfortable with trading with. You can apply that way of thinking. So, which is the reason why I noted out the 10:30, by the way, because I'm selling above the 10:30 opening price. So prices here, we wick up into the 1 minute fair value gap. This is my entry right here. We wick up into that 1 minute fair value gap, and then we instantly take out this black line right here. This horizontal black line is the 50% level, is the discount. So we take out the 15-minute/30-minute low and the equilibrium or discount of the dealing range. And yeah, it was a in and out trade here. Very, very, you in, you're out. And I set up some standard deviations from this swing low, 10:29 swing low to 10:30 swing high. And I took partials here at the I think when my trade hit 2 RR, I also took another partial there. And then I took another partial at -2 standard deviation. And at that point, I only had one contract left. So I moved my stops to break even. Well, I moved my stops to break even here once I hit my 1-to-1 RR. And I take off partials here as well. Because keep in mind, what are we doing on the higher time frame? We're still technically, we're still bullish. We're still trading inside bullish PD arrays. But the reason I'm selling here, I'm shorting here, well, I don't want to repeat myself, is the reason why I'm shorting here is because I'm targeting the discount of the dealing range. So technically, we still haven't hit, there still should be a reason for us to continue lower. Yeah, that's going to wrap up my trade recap. Hopefully you guys got some understanding of how I trade and how, you could see prices in a very objective way of reading prices. The way I trade here, it helps me to stay away from like conditions like these. I have a YouTube video on my channel, of course, where I explain to you guys basically all of the rules that I have for myself, and you guys should check that out if you guys are interested. But like this price action right here on Wednesday, look at the PM session. Look at this back and forth. If there's no I guarantee you that if you go into the lower time frames here, there is not a single there's no displacement here. And even on like Tuesday and Monday, especially Monday, this week was hot booty. We consolidated New York AM session and New York PM session. And some of the rules that I have for myself will prevent me from like conditions like these. I always require fair value gaps. That means I always require some sort of displacement. And looking at Monday's price action, no displacement at all. But I'm dragging this video a little bit too long here. Thank you guys so much for watching. And I know it's been a while since I've posted a trade recap, but I just haven't been taking trades. I've come to realize that less is more. Let the trade come to you. You don't chase the trade. You let the trade come to you. Yeah. And until next time, peace out, guys. Skadoosh.